morning, everybody. It's Tuesday, November 21st, and this is the Ag Yield War Room. My name is Dan Dempsey, and I'll be moderating today's session. As always, if you have any questions or comments, please feel free to drop those in the comment section, and we'll be more than happy to take those during the call. Quickly, overnight markets: December corn up 3.5 at 473. January soybeans were up 14 at 1381 and a quarter, and December Chicago wheat was up 3 1/4 at 546 3/4. We've also got the dollar index a little lower here this morning, hovering right down there around the 200-day moving average. I know we'll talk about that a little later. Yesterday afternoon, USDA came out with our crop progress, and 93% harvested for corn. That's compared to 91% on average, and they did not print a bean number, which leads me to believe we've got a majority of the soybean crop out of the field. As we start here this morning, we've had a couple of days now to digest the Argentine elections. Yesterday, we saw huge influx of foreign money come into some of their companies. We saw a huge rally in the NASDAQ here in our markets. And I wanted to throw it to Jason here this morning. He had a couple of thoughts and questions just for the group in terms of what this, on a real big picture, what this could potentially mean.
Yeah, thanks, Dan. Sunday night, a lot of us traders were talking about this election going into the Sunday night open, and a lot of the talk was that this could be kind of bears for beans. We talked about this a little bit yesterday on how we didn't see that making a lot of sense. And so the market did quickly rally from the Sunday night low, and we settled up yesterday pretty strong. I mean, we saw buying all day in the bean complex yesterday. We closed up close to 30 cents. And then immediately overnight, beans were up another 10 cents. So that, 50-cent move in 24 hours, essentially. In the bean markets, that's a pretty big move for this time of year. I know we're trading some weather, but it seemed to me to have some relationship to what was going on in Argentina. So I just started to think about doing a little research. And to your point, Dan, I did see that a lot of these companies in Argentina were quite a bit higher. For example, their largest energy company, or one of the largest energy companies, was up 40%. One of their large state-owned banks was up 20%. So I saw that as a lot of foreign money, like the U.S. market or European market, wanting to invest into the Argentine economy. And as I dug more into the story, this new president-elect ran on, ditching their peso, ditching their currency, which is just garbage, and tying their whole economy to the U.S. dollar. I thought that was interesting. That makes sense to me, of foreign investment willing to invest into Argentina. How does that relate to beans is, what I kind of struggled with on why that would be friendly beans. One thought I had was, if they could pull this off and get on the U.S. dollar, is that going to make the U.S. more competitive and kind of change the dynamic of how a weak currency in Brazil, weak currency in Argentina, we get undercut a lot on business? And maybe that changes if this new economy could get on the U.S. dollar, was my thought. Kind of rolling around in my head, and maybe I'm just kind of grabbing at some ideas there. But anybody have any thoughts on that?
Yeah, I do. I agree. And I think it makes sense that money's pouring into, it's been so far left. I mean, they've decimated the country economically, and it's basically uninvestable, because they change the goalposts so often. If they need money, they jump taxes dramatically, and it's just not a business friendly environment. So I think it makes a lot of sense that money would come in with this type of a president, and he's still got to perform on all the promises. But no, I think it's encouraging for their economy. I think the point about, competitive with the U.S., I think, their production's really also suffered. Look at the growth in Brazil versus Argentina. Now, I know it's not the same ground, and, there's more land in Brazil, but again, it's investment. We knew big cattle operations in the U.S. They had these big partnerships down in Argentina, and they came in overnight and basically said you can't export, and literally just had to let thousands of cattle die. Like that kind of uncertainty, right? Like whether it's agriculture or anything, doesn't really, want you to invest a bunch of dollars. So in my opinion, it's going to be a huge boom for their agriculture economy as well. To your point, I don't really know, the currency and, at the end of the day, supply and demand, right? If they want to move product, they'll just have a cheaper basis, or they'll just undercut us that way versus the cheap currency. And a lot of times, actually, their really cheap currency ended up being bullish because they kept soybeans, for example, stored as a hedge against inflation, because every dollar that they sold, like, it would inflate 25% next week, right? So they felt like they had to hold supplies just to hedge their own personal costs of living with the extreme inflation. So I personally don't think it's a long-term bullishing for soybeans or necessarily bearish. I think it's bullish for their economy and probably bullish production down there in the long run. But we talked about this with oil share, some of these other things, like trading what could happen long run was I think a mistake on a 75-80 cent break on Sunday night. So.
Well, I would add to that too, that we always want to try to figure out the next why and the next what. It's what we do to a certain degree, but the time frames a lot of times don't always mesh with the logic in either direction, and it takes a while for these things to sort out. We've known about the crush expansion in the U.S. for well over 2 years, and in that time we've still had a $3 soybean break. So that is just really a testament to marketing for margin and trying to find the things that work for people. I was just looking at a Jan Bean chart this morning, and going back to February, we've only spent about 18 days above the prices that we're seeing this morning. So it's just something to keep in mind, that sometimes these rallies can be fleeting, and our narrative or our logic does not always mesh up with pricing. So just going back, that it is we're in fairly rare air right now for Jan beans.
It's a great point. And another point you made too, Jace, is just this recent plummet of the US dollar. We were down 2% last week, and now we're, yesterday trading to the lowest point since really September. As you look back, a continuing break in US dollar, is that going to, potentially, be friendly beans or friendly, I guess, commodities in general?
Sure. Yeah. The US dollar index, is a basket of different currencies. It'll be good for US exports in general, but, like the Brazilian real is not in that basket, right? So I think a better indicator of the soybean market and how we may, be more competitive or less competitive with South America is really on the Brazilian real. And we've talked about this in the past, but that also has been strong. So as the dollar has been weak, the Brazilian currency has been strong. So there is an argument to be made, not only on this recent rally, that some of it has to do with just getting back into line with that pretty strong currency down in Brazil.
So if I sold some beans, Chase, I probably, maybe look at getting some out forward call protection if I'm worried about,
Yeah, I think
as we go forward. A little reownership.
Yeah, sure. Any form of that, right? Making some sales, reowning with some calls, getting some short-term put coverage to get you through the real gut slot of their weather market, right? Call it Jan, Feb time frame. Get you through, kind of the heart of the Brazilian weather. You'd have to have more protection to really get you through the entirety of South America. Probably even out to April, May coverage. Anything under the sun really to protect yourself from the downside, and if you want to spend a little bit of that to still be in the game, makes sense to me. So.
I'm gonna put my tinfoil hat on here for a moment too. There's a quarterly, sometimes a money commitment through a quarter, and anyone who's looking at that sort of strategy to put the floor in on some calls, anyone know when we last year on December 30th is when beans topped out, and then we subsequently were down for all the way into June. So as those seasonals line up, and then we move into the rainy season in South America, is that an exhaustion of that play by money? And I think that's just worth placing in the back of your head. And it's not at all an endorsement to wait and sell your beans on December 30th. But if you're going to sell them in own calls, you may look at that as a place to partially lighten up or go a little heavier. So I know that gets a little bit out of the fundamental track, but we do see a proclivity for managed money to have a commitment over a quarter, and then we kind of see things get exhausted at that point.
Yeah, and I think, to add to that, like devil's advocate, like you see, some of these commodities that are just going ballistic right now. They're hitting new all-time highs by factors of 2, meaning that they're double their previous highs on some of these markets, right? So when a story does develop, these guys do have a lot of ammunition these days, these players, right? So that's why I think, if you're looking at, hey, these are really profitable levels for me as a farmer, find out how much you want to reinvest, to Jason's point. Like don't give up, this good level that you're, profitable, you had a good crop. Like if you can sell and make really good money, and just find out how many of those dollars you want to reinvest, in case something happens in South America, right? Like keep it simple, it's fun when you have this type of situation, right? Good production, high prices, concerns in a different country like that. Whatever happens in Brazil is not going to affect your crop that you already grew, right? And if you're really profitable, take advantage of it and find out, talk to your consultant and figure out how many dollars you want to reinvest. But that's really all it is, right? It's just about money management and how many of those dollars you want to use to, be still in the markets.
That's a really good point, Justin. We got a couple of minutes here, guys. Rylan, I wanted to throw it to you real quick. We had kind of our first session post cattle on feed from Friday.
Hey, Dan. Rylan jumped on the phone with a customer.
Oh, okay. Well,
yep.
When we will, we can address that when we get back to Rylan. Want to point out a couple of things too. We've talked about it a couple times, guys. Grain options expire on Friday, so we are going into expiration. I know most of you have been in touch with your consultant, but please, if you haven't, I know they'll be reaching out and get in touch with them. Make sure you've got everything properly positioned, as we head into the end of the week. A couple things just administratively. We will be closed, obviously, in observance of Thanksgiving on Thursday. Full markets on Wednesday. So we do have a full close tomorrow, 1:30. We will reopen Friday morning at 8:30. So like the old days, a hard reopen. And then the markets will close early on Friday at about 12 o'clock. So AgYield, as always, will be fully staffed and prepared to take care of you. So if you have any questions, don't hesitate to call us. Last thing real quick, guys, I saw some, I don't know what it means. I mean, they're just stats, but, like year-to-date prices as we're coming into the end of the year. And I noticed, corn's down about, close to 31%. Beans are off 9.5%. When we look at like money repositioning and things like that, specifically, and I'll go to Justin on this one, but does that tend to play into it? I mean, do you look at overall year-over-year changes and stuff like that?
I think they do. I mean, a lot of these, like, Goldman Sachs basket of commodities, the indexes, like they do, they publish their new, matrix of what percentage are going to be in crude oil and corn. And so there's always some front running on some of those rebalancing things, but at the end of the day, I think when you have big carries, like we see in wheat, like we see in corn, like that costs you to own a long, right? Like when there's inverses, they love to be long, right? Because they sell out the front and then get to buy the next contract at a discount. When you have really wide carries, there's a tax on you to hold that position, no different than a farmer holding physical, right? So index funds, these long only guys, they tend to really dislike that. If you look at a chart of wheat, and even when it has these $5 rallies, like over time, that's why they love to be short wheat, because it has such good carries. We're a residual supplier to the world. We only sell wheat when everybody else is out of wheat, it seems like. So it just pays too much money to basically store and roll your position in wheat. Look at the Andersons or some of these people that, that's their earnings a lot of times in these years. So to that point, Dan, I would say it's more of market to market fundamentals as to why they would want to, just be long corn. I think there has to be a story. Maybe one's developing here in soybeans. Maybe one does develop in corn. Again, that's going to have to be South America. I think that ultimately, gets people interested in flipping and going to the long side, in my opinion.
That's good stuff. Yeah, we just always hear about those stats, and it's interesting to know how the money thinks about that. Just came into the 8:30 open here. We got corn up 4 1/4, 473.5. GM beans up 13 1/4 at 1380.5. And December Chicago wheat's up about 3 1/4 at 546 3/4. Any parting shots from the guys as we head into today?
Nope.
All right. I think we're sitting good. Everybody, appreciate everybody tuning in today. We thank you for taking the time. And as always, we'll be back tomorrow morning. And everybody have a great day.
Yep. Thanks, guys.
Thanks, Dan.
Thank you.